Hi and welcome to the market view for Wednesday the 3rd of September 2014. Starting off with the 30-minute pound chart. We had a buy signal to start off the morning's activity. This came in just at 7:30. The market failed to fill this trade. I'll just mark this one up for you. You can see there that it's heading back towards that 166 resistance that we spoke about in yesterday's market view. This is immediately followed by a sell signal, and we see the market filling this, and then prices continuing to move lower, closing below the scalp. And once we get below the scalp, we can then do many things, actually. As we've spoken about before, you can take half off the table, move the stop to break even. We've also got the 165.50 there. I do believe it is the 165.50. So this is going to create a resistance should the market start to move back. So we could take off half the position here, move the stop to break even, and then see what the market does. Otherwise, we can trail the stop once the market has closed through the 20 bar average. So I'm just going to remove the scalp there and grab 100% extension. And then what I'm going to do is to use the lower highs to move the stop down. So now we can see that the market's got the opposite here. It's got rising lows all the way up to this point, and then we see the market starting to move back down. Each successive high is lower than the previous high, all the way down to this level here, and eventually you see the market coming up and within a whisker of touching this. Let's just make sure that that is the case. The high is 164.90, 164.901. So within a pip of taking this trade out at this level, which is around 63, 64 points at 164.901. However, what you can do, there's another option here as well, is that you can allow the market to close back above the 100% extension as well, and thereby showing that it has further strength. If it hasn't, then it will continue to move lower, which you see here going on for another 10 pips there. So a good day last on the pound. It's starting to liven up a bit, but then hopefully as we move into September, this will be the case for all markets, as it's been fairly quiet for the last 4 or 5 months. It's been appallingly quiet, in fact. So that's the 30-minute chart there, 63 pips for this market. There was nothing in the 60-minute chart to indicate prices moving lower. Fortunately, it was in the 30-minute though. And in the daily chart, of course, we were already marked up down to these lows. Let me just remove this. We've got a low to the left there. And let me just alter the... in fact, let me just reload all of these charts, because this line isn't drawn properly. This is where the market's currently trading, so a quick reload should sort this out. I thought it looked slightly odd as the markets continue to move lower, and that's more like it. Right, let me just do that again, just bring this up. So we're at the 164.64 level, which we've had drawn in for some time. You can see this in the market here on the daily chart. Marked up last week, market trading to this during yesterday's session. So in the lows of yesterday, we know that, or on the overnight actually, it's just come down on the overnight. In this area here, where we got to the start of the overnight session, we had this 164.64 marked up here. Let's see what news we've got today that could move the markets. Let's just reset this, and in the news, we've got services PMI at 9:30. That's the only high-impact news item today for the markets. That is at 9:30. That's forecast to come out less than forecast as well. So we could get a bit of a reaction from the market on this news. In the Dow, yesterday, the market showing indecision. We're stuck in a sideways consolidation phase at the moment. I'm just going to draw in across here, because this is where the market's finding support. The 17,000 area is where it's desperately working hard to stay above. I've also put in the 76% last week, which the market traded up to. Market came down, traded back towards this, struggling, and then moved low yesterday. But it keeps being bought back off the lows. Notice the volume here as well. We've got some selling and indecision in the market here at this time. The selling came in, and then it was bought back by the pros there. In the implied volatility, this has increased slightly from 9.83 yesterday to 10.4 today. Again, this is reflected in the price chart, and we can see that this volatility is starting to increase, and there is a massive risk. There's no doubts about that. If you have a look at yesterday's market view, we can see that the margin debt alone is way in excess of what it was in 2000 and 2007. So this market is due for a correction. There's no doubts about that. Right, well, that's it for today. As ever, thanks for your support, and hopefully we'll see you tomorrow. And as ever, thanks for watching.